Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate finance. Sometimes I feel like these SEC filings are just dressed up treasure maps, and today we're digging for gold, or maybe just trying to understand why the treasure chest seems a little lighter than expected. Iovance BioTherapeutics just dropped their quarterly report, and let's dive right into the financial heart of the matter. Looking at their balance sheet for June 2025, the company has total assets of about $907 million. That sounds like a lot, but let's see how it all stacks up against their liabilities. On the other side of the ledger, their total liabilities are around $2,009 million. That's a decent chunk. But what's really interesting is their accumulated deficit, which is a whopping $2.6 billion. Yeah, you heard that right. Accumulating a $2.6 billion loss can be a serious red flag, signaling that the company has spent far more money than it has brought in over its lifetime. Now let's talk about the income statement. For the 3 months ending June 2025, they reported a net loss of over $11 million. And for the 6-month period, that loss balloons to over 20 steep burn rate. But hey, they are starting to bring in some revenue. Product revenue for the 3 months ending June 2025 was almost $60 million. And for the 6-month period, it was around $109 million. The big chunk of that revenue is coming from Amtagvi, which brought in about $54 million in revenue for just the 3-month period. Now that's up significantly from the previous year's $12 million. This shows their main product is gaining traction. Proleukin, on the other hand, saw its revenue drop quite a bit, from $18 million in the same period last year to just under $6 million this quarter. This might be due to restocking effects from the previous year, but it's a notable shift. Overall, total product revenue jumped a massive 93% for the quarter compared to last year. That's huge growth, but it's coming with growing expenses. Cost of sales nearly doubled for the quarter, going from $31 million to $56 million. That means for every dollar they earned in revenue, more of it is going directly into making the product. And then there's research and development, that crucial but costly part of being a biotech. It jumped from $62 million to almost $80 million for the quarter. This is where they continue to invest heavily in finding new treatments, but it's also a major drain on their finances. Selling, general and administrative expenses also saw a slight increase. It seems like they're ramping up their operations to support the Amtagvi launch, which is expected. All these rising costs, despite the revenue growth, are reflected in their net loss for the quarter, which increased by 15%. So while they're selling more, they're still losing more money overall. Looking at the cash flow statement, they used about $171 million in operating activities for the first 6 months of the year. That's an improvement from the prior year, which is good, but it's still a massive outflow of cash. On the investing side, they had maturities of investments totaling $21.10 million, but they also purchased new investments worth over $66 million. It looks like they're actively managing their cash reserves. Financing activities show they brought in about $62 million from selling stock. This is how they're keeping the lights on. Raising capital through stock sales is pretty standard for companies like this, but as they mentioned, it can dilute existing shareholders. And speaking of financing, here's a big one. The company openly states they will probably need more money. They believe they have enough to last at least the next year. But developing new drugs and building out manufacturing is incredibly expensive, and they might need even more funds if things go faster than planned. This is a constant tightrope walk in the biotech world. Now, let's talk about some serious risks they're facing. Manufacturing these cell therapies is like building a custom rocket for every single patient. It's super complicated, and any hiccup in quality control or scaling up could seriously delay or even stop their production. They also heavily rely on partners, including government and academic institutions, for research and development. This means their success can be tied to how well these partners perform, and sometimes those partnerships don't pan out. And then there's the stock price itself. It's volatile, and their report highlights that news from clinical trials, regulatory decisions, or even analyst reports can send it swinging wildly. The regulatory landscape is a minefield. They're dealing with the FDA and foreign agencies, and approval processes are long, expensive, and uncertain. Plus, those approvals can come with strings attached like costly post-market studies. There's also the risk of misconduct by their own people or partners. This can lead to major legal and financial headaches. Now, looking at all these numbers and risks, here's my take. Iovance is clearly making progress with Amtagvi, and the revenue growth from that product is impressive. However, the massive accumulated deficit and the ongoing high cash burn rate mean they are still a risky investment. They are in a critical transition phase, moving from a pure R&D company to a commercial one, and managing that transition while funding extensive drug development is a delicate balancing act. The reliance on partners and the sheer complexity of cell therapy manufacturing are significant hurdles. Investors are likely betting on Amtagvi's long-term success and the pipeline, but they need to be prepared for continued volatility and the very real possibility of further dilutive stock offerings to fund operations. It's a high-stakes game, and success hinges on flawless execution and continued positive clinical and regulatory developments. Alright, that's a breakdown of Iovance Biotherapeutics' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord in the description for more exclusive content. Thanks for watching. See you next time.